So
Oh,
the
wow. I love this chart.
yes, the this is the x-axis is the number of years that this great investor has been investing. All the dots are great investors. I don't know why some of the fonts are so much lighter, but the y-axis is their annual outperformance versus the S&P. So the delta. So
Outperformance.
not just raw return, but actual like delta. Yeah, which would
They should
arguably
have
be the
given
thing
us
that.
the raw numbers. This is confusing.
Well, in some cases, it'd probably be negative, and then you'd think like, oh no. But if it's like less negative than the broader market, I mean, ultimately, what you're going for is market beating performance, right? Why else would you invest? Why else would you pick stocks? So, anyways, as you can see, there we got the goat over here, Warren Buffett.
Yeah.
But it's just kind of interesting to see time in relation to what I should say. I think the overall thesis here is look how difficult it is to get prolonged market beating returns at after like about the 10% threshold, because this is some of the greatest investors ever.
Well, here's a question for you. I'm going to play devil's advocate. So, if you're on the left side and you're up high, like how many years do you need to be compounding at those rates to just be like, I'm done?
Yeah, right? I know that's how Peter Lynch did it. I mean, he went for like 12 years, 13 years or something like that. And then he's just all right, I'm good.
Yeah. So I think that might be an oversimplification to say.
Oh, it is.
Yeah.
It is. But still, look how few people are over there. Just people who maybe it's by choice, maybe it's not. Yeah. I'm sure a lot of these people still have the bug of some sort of wanting to keep investing for themselves. But yeah, you're right. Is it 25 years is the cutoff? Because I mean, to have careers over 40 years investing, that is a long time. so just like for any career, really, 40 years, like that's usually where people are kind of done.
I think the longer time frame to me suggests the higher quality investor, just because some of these guys earlier on could have got lucky over a short time frame. You can get lucky to an extent. You could be in a great bull market. So to get in and out over, say, 10 to 15 years is not as impressive as maybe moving towards that 25 mark, like you mentioned, is where it's really starting to be a great indication of one of the best investors of all time. So obviously Buffett, I think that speaks for itself, sitting over there with someone like Shelby Davis and even Walter Schloss, which is some of the most impressive one there. But if you go back to and you see like Joel Greenblatt right at the top, that's pretty crazy as well. It's at about 27% over 20 years outperformance. So
that'll get you to big wealth very quickly.
I mean, well, that's why we're following the magic formula, right, Jack?
Yeah, a little bit. Yeah.
I'm curious, Rick Guerin. I'm surprised he's so high. Monish Pabrai recently shared a story about Rick Guerin, about how he was leveraged in 73, 74 during the big crash. And he had to sell like most of his Berkshire stake back to Warren Buffett at like $40 per share. So I wonder if that, that return factors that episode in. Seems like maybe it wouldn't.
Yeah. I don't know where this data is actually coming from.
It's a cool chart. I love it.
Yeah, it's still cool for sure. And I'm sure, it's for Greenblatt. I wonder if the return they're picking is magic formula, which was like a back tested formula. And I don't know if he necessarily did that during that testing period.
Well, that's the fund he ran for 20 years. And it was a special situations fund. I think that's
was it that high? Was it really that high?
Yeah.
Wow. Fantastic. I love it.
Yeah. I think this would have included his Marriott investment and everything. This was that time. Yeah.
Wow. Shelby Davis is an interesting one on there if you haven't checked him out. I guess he really speaks to the whole circle of competence, investing within your circle. Pretty much exclusively invested in insurance companies. Nice. Super interesting guy. There's a book I'm yet to read, but I've kind of read some of the notes about it. And I use the Davis double, which is like a valuation method that he created, a really simplified approach. It's just calculating the business growth plus multiple expansion plus your dividends, and that gives you your annual return. And you could set whatever your hurdle rate is for that combination. And he kept it simple. He kept it with insurance, and that result of 45 years at 10% outperformance. So speaks for itself.
Wait, so
45
you have to estimate each of those things to come up with your return expectation?
Outside of the dividend yield, yeah, I guess you could.
How do you estimate a multiple expansion?
Well, that's the prediction you have to make. If you think a company's that's currently 10 times earnings will be worth possibly 20 times earnings over 10 years, you run that compounded growth rate and add that into your yearly return. Or theoretically, though, you don't have to use that. Often when I use it, I'm getting multiple compression, so it's actually a negative number, which still factors into your equation, of course, because I'm usually not willing to pay or accept a higher multiple 10 years out into the future, unless it is a very new, undervalued company. It would be a rare circumstance. So not much of your return would come from that multiple expansion.
Yeah. Just be gravy on the top, right?
Yeah.
I think the most impressive one here on this chart is George Soros. I mean, 40 years of almost 18%.
Why is he grayed out?
Yeah, what's
I don't
the
know.
triangles? Is there part of that missing that we're not seeing? What are the triangles mean?
I no, there's no key or anything, so I'm not really sure what that is. Maybe it's like guessing his actual returns. I don't know.
Druckenmiller used to work for Soros, right?
He did.
Yeah, that's right.
Yeah. And I think he identified the pound trade, the pound to Deutschmark, like the arbitrage.
Yeah,
trade.
that's right. And Soros said, why are you not leveraging?
Yeah,
for that,
leveraging
right?
into it. Yeah, he said that in that recent interview. I didn't realize it was him who identified that trade, though. Which is kind of interesting because that was a big mark on Soros's name. Anyways, very cool chart. Thank you to
That makes sense.
who shared it. Thank you to
Who can we thank?
I want to Math in the Discord. I don't know who Math is. Math shared it with us, so thank you.